Hello and welcome to this video. In this video, we are going to do a A-level question from paper 3, Feb March 2023, question 2. The question states that XPLC started its information technology business on 1st January 2022. Its statement of financial position at 31st December 2022 includes the following balances. Ordinary share capital, the share price per share is $2 and the total ordinary share capital is $800,000. Share premium is $60,000. Revaluation reserve is $70,000. Retained earnings are $24,000. 5% debenture which will be redeemed in the year 2026 and the value is $100,000. Bank overdraft which is $14,000. The following information was also available. First, the 5% debenture was issued on 1st July 2022. The freehold property are revalued upward by $70,000 on 1st August 2022. The interim dividend of 12 cents per share was paid on 1st October 2022. The market price per share at 31st December 2022 was $3.35. In the A bit of the question, bit 1, we are asked to find the price earning ratio. As the name itself indicates, we can get the formula from here. Price is the market price per share and earning is the dividend earning which the each shareholder receives per share. So that is earning per share. So whenever we have a ratio, it is usually asked that to derive what we get the information from this ratio. Hence what we can do is the most easy way of doing it with the help of the formula, that is price earning ratio is directly proportional to the market price of the share. That is, higher the market price, higher will be the price earning ratio. It is inversely proportional to the earning per share, so lower the earning per share, it will be high. So this is directly proportional to the market price of the share. That means if the market price of the share is quite high, the price earning ratio will be high and it will show that the shareholders have lot of trust for the future of this company, and as they have lot of trust in the future of this company because it may be in a growing phase and hence it has a good reputation in the market, and for this they are ready to pay a very high market price for the share and buy the shares at a very high market price. So that is what we can get it from the price earning ratio. So for this we require earning per share, and for earning per share we have a formula. How do the shareholders get their earning? They get it from the profit from the year because this is used to give the dividends, and we want it for share, one share, that is per share. So we will divide it by the number of ordinary shares issued. So first we will start with the number of ordinary shares. We will get this by taking the share capital which was given as $800,000 divided by the face value of each share was given as $2. So we will get the number of ordinary shares which was issued as 400,000 number of shares. So then we have been given the interim dividend. In the additional information it was mentioned that there was 12 cents of dividend which was paid for each share. So 400,000 times 12 cents will get the interim dividend paid as $48,000. Profit for the year is not mentioned in the question and we have to get this information. And how do we get it? What we do is we take the profit for the year, from there we retain some of the profit and we pay some of it as dividend, and we also transfer some of it as general reserve. We don't have general reserve here, so to get the profit for the year we take the retained earning. To this we will add the dividend, that is $24,000 plus $48,000 which we have calculated here, and we'll get the profit for the year as $72,000. Now we can get the earning per share, that is profit for the year divided by the number of ordinary shares issued, which will be 72,000 which we have calculated here divided by 400,000 shares which was issued. We will get earning per share as 18 cents. And then the price earning ratio will be the market price per share divided by the earning per share, that is, it was mentioned the market price per share was $3.35 and the earning per share we have calculated here as 18 cents. So we'll get 18.61 times, that is, it shows that the market price is quite high and the shareholders have lots of trust in the growth of this company, because of which they are ready to pay a higher market price. Next we have dividend yield. Dividend yield is equals to annual ordinary dividend per share times 100 divided by market price per share. The annual ordinary dividend per share, we get it by taking the interim dividend as well as the proposed dividend. We don't have proposed dividend here, we just have interim dividend which is given in the additional information. So we'll take this interim dividend as annual ordinary dividend paid per share as 12 cents divided by the market price per share, which is $3.35, and we will multiply it with 100. We will get dividend yield as 3.58%. Next we have gearing ratio. How do we get the gearing ratio? Gearing ratio is equals to fixed cost capital times 100 divided by total capital. Fixed cost capital is the non-current liabilities, and the total capital consists of share capital plus all the reserves plus the non-current liabilities times 100. So to get this total capital, we'll take the share capital which was given as $800,000 and all the reserves, in which we have the share premium reserve as $60,000, revaluation reserve as $70,000, the retained earning which was $24,000, and the non-current liability which is $100,000. So we'll get the total capital as $1,054,000. Now our gearing ratio will be $100,000, which is our non-current liability, and then divided by the total capital, which is $1,054,000 times 100. We'll get the gearing ratio as 9.49%. Next we have return on capital employed, which is ROCE, which is equals to the operating profit times 100 divided by the total capital employed. The total capital employed which we have calculated here is $1,054,000. We don't have the operating profit. So what is operating profit? It is the profit before interest and tax, or we can take the profit for the year and then we add the interest and the tax paid. We don't have tax here, so we'll add the interest which we have paid. The interest was paid on debenture. The value of debenture was $100,000 and the interest which was paid was 5%, and it was paid on 1st of July. So from Jan to June we have 6 months. 6 by 12 will get the interest on debentures as $2,500. The profit for the year which we calculated was $72,000, and to this we will add the interest which we have calculated as $2,500. We'll get the total as $74,500. So our operating profit, which is $74,500, divided by the capital employed, which is $1,054,000 times 100, we will get ROCE as 7.07%. Next we have additional information which states that the industrial average ratio for 2022 are industrial average. This will be the benchmark for comparison, and we have price earning ratio as 16 times, and then the gearing ratio is 25%. In the EBIT of the question, we are asked to analyze the performance of XPLC comparing the result with the industrial average in respect of first price earning ratio. You see, we have calculated the price earning ratio earlier for XPLC and it was 18.61 times, and here the industrial average is 16 times. This shows that the investor have more confidence in the company, hence the market price of XPLC is higher when compared to the market price of other companies, and it also shows that the investors are willing to pay a higher share price as there is an expectation of future growth of XPLC. Then in the gearing ratio, we are asked again to compare the gearing ratio as well. If you remember, we have calculated the XPLC gearing ratio, and which was 9.49%, and here the industrial average is 25%. That means XPLC have a very low gearing ratio, and this shows that the low gearing ratio means the business is at a very less risky zone. It does not have to pay a lot of interest, hence it is a risky zone where outside liability is quite less and fixed capital liability is quite less. Hence XPLC is at a safer zone, and then low gearing also means that the fixed interest paid is also less and they will have more profit available for distribution. Further additional information is provided which states that one of the directors suggested that no final dividend for 2022 should be proposed. In the CBT of the question, we are asked to advise whether or not the Director should propose a final dividend for 2022 and we have to justify our answer. You see, you have to state your advice in clear words because that will fetch you 1 mark. You can either agree or disagree, and if you agree, you can use this different reasons which I have mentioned here to support your answer. Like the first one, which is mentioned here, is you see the interim dividend was quite low, which was just 12 cents, and the earning per share was just 18 cents, which was quite low. And as it is quite low, the shareholders may be expecting more dividends, hence the dividend should be proposed at the end of the year. Apart from that, the dividend yield was also low, that is, it was just 3.58%, whereas the interest on debentures which we are paying is 5%. So this is lower than even the interest on debenture which is paid. This may lead to grievance in the shareholders, so they should propose more dividend at the end of the year. Apart from that, the share price can be reinforced if more dividend is proposed at the end of the year. What I go with is this, that they should not propose more dividend at the end of the year, because you see they are already facing, XPLC is already facing short-term cash crisis, because we see they have an overdraft. So most of the successful businesses fail because of the liquidity crisis, which leads to insolvency, and hence, as they have cash problem, that is liquidity crisis, it's better they should not propose more dividends because it may lead to cash outflow. Apart from that, they are in early stage of development, they are in a growth phase, and as they are in growth phase, they require more retention of the profit, hence the dividend should not be proposed. Apart from that, we have a high PE ratio, that is price earning ratio is quite high, which shows that the market price of the share is quite high, and this shows that the shareholders have trust in the growth of XPLC, and as they have this trust in the growth of XPLC, they may forego the short term gain of getting more dividends for the growth of the business. So based on this, I suggest that the director who has stated that there should be no proposed dividend for the year ended 2022. This is what I support. So with this, we have completed this question. Thanks for watching my videos. Have a peaceful and blessed life.